There's a number floating around right now that has completely hijacked the conversation about AI and infrastructure. $6.7 trillion. You hear it quoted in headlines, investor decks, conference panels, usually with a tone that suggests either awe or panic. And almost everyone reacts the same way. They hear 6.7 trillion and immediately decide what it means. Either this is the biggest opportunity of our lifetime, or it's an obvious bubble waiting to burst. But both reactions miss the point. Because that number isn't a check that's been written. It's not a budget that's been approved. It's not even money markets have agreed they'll spend. It's more like a stress test. A way of asking a simple question. If intelligence keeps scaling the way we expect it to, what would the physical world have to build in order to keep up? That's it. It's not a prediction. It's a thought experiment with consequences. What is real, and this is the part people skip over, is what the system looks like today. Data centers are effectively full. New facilities are being reserved before they exist. And the limiting factor isn't whether customers want compute, it's whether projects can get power, permits, and timelines that actually work. In other words, the problem isn't enthusiasm, it's friction. And friction is where asset prices move. This isn't a story about too much capital chasing too little opportunity. It's the opposite. There's plenty of capital. What's scarce is permission. Permission to connect to the grid, permission to draw power, permission to build where demand already exists. You can't spin up a transmission line the way you can spin up software. You can't accelerate zoning meetings because models get better. You can't fix a 10-year grid bottleneck with venture capital. So when people ask whether $6.7 trillion is real, what they're really asking is the wrong question. The better question is whether the system can absorb even a fraction of that implied demand without repricing everything that sits upstream of compute. And so far, the answer has been no. That's why utilities, power-adjacent assets, industrial land, and infrastructure corridors are moving, even when AI stocks wobble. Not because markets believe every dollar will be spent, but because they can already see where the choke points are. The number isn't the story, the constraints are.